Thanks very much, Chris, and also from my side, welcome here in our convention point. We're delighted to be hosting this event for the Crypto Valley Association. It's focused on exchange and where change is going to happen in the future. Exactly the opposite, I think, of a classic car, which is nothing but very old technology. You can fix it with a big hammer. I don't think some of the challenges we've got are going to be quite that straightforward to address. You'll all be aware that we announced last July the establishment of Six Digital Exchange, or SDX. And over the next few minutes, I want to just give you some thoughts as to the rationale for this, our progress as we're moving forward, but also our approach as an infrastructure provider. We make a very clear distinction what our role is. We're very much a B2B infrastructure provider. We're holding on to some of the existing structures, fully recognizing that over time those business models will change. But there's only so much change that I think particularly our regulators and the market can bear if we really want to bring the potential and the opportunities of the new technology and the digitalization of assets into the mainstream and make it acceptable not just at a retail level but also at an institutional level. So I think we're really at the cusp now of some very substantial changes in the market. I suspect that over the next 10 years we'll probably see more change in how capital markets function than we have done over the past 400 years. And that's a very significant challenge that, although we're very early on at the moment and there aren't a great number of providers out there that are anywhere close to being mainstream, it's going to be a huge challenge going forward. And I think there's three imperatives that we really need to look at. The first one, as we move forward, the first one is the business. How does the business network change? How do business models change? What opportunities exist now and will exist in the future for developing business models going forward? How do we ensure that rules around asset and investor protection are maintained, but there's still enough room for innovation and for moving the business forward? So that's the business side. That's already a fair amount to deal with. The second piece is cultural. What do the new business models and new ways of working actually mean for how we have become accustomed to working ourselves, how we deal with savings, how we deal with things like pension schemes, all of which are under pressure? What does this revolution into the world of digital assets and new assets that are currently not available mean for all of these structures and, in many ways, the savings we rely on for our old age and what our younger colleagues will be looking at going forward as they look at what their savings and what their lives are going to be looking like. So at a cultural level, we have a number of challenges. We see ever more turmoil in the markets as a whole, a lot more volatility. Traditional structures, I think is fairly clear, are not that great at dealing with that kind of volatility. And how the new world is going to do that is still very much an open question. It's something, at the very least, we need to think about as we move forward. How do we deal with those things? Because we do have a responsibility that goes beyond just creating something neat and that can make a bit of money. And finally, and perhaps least importantly, there's the imperative of technology. Least important because I think the velocity of the change is a much more important factor than actually the technology itself. How we deal with changing that technology, moving away from old systems that tended to be built and kept for 20, 25 years and then legacy platforms replaced, we're now moving into a world where this kind of change will be happening on the fly, and we need to be a heck of a lot more agile as organizations, but also as individuals in terms of how we develop ourselves to accommodate all of that. So I don't have the answers to any of those three imperatives, and I don't think anyone in this room does. But I think it's something we need to be aware of as we look at the opportunities that are ahead of us, we look at the challenges we face, and we look at how we set ourselves up, because we're still at an early enough stage that we can give these things some thought and it's not already written in stone. So what are the opportunities? I'd be the wrong guy standing up here speaking to you if I didn't absolutely believe in the opportunities around the digitalization of assets. And for us, it's not about blockchain or any other specific technology. It's really about how does the world of assets change and where are there future opportunities in that. And it vastly expands the universe of securities and investments that can be represented. And I was speaking earlier with a gentleman. It's not just about looking at new native digital issues, but also how do we bring all the equities and fixed income instruments, ETFs and so on, in the traditional world into the new digital world. And that's a very significant challenge, but gives huge, huge opportunities, in particular when we're looking at how do we address not just the retail, but also the institutional markets. Part of our role is to provide an appropriate platform for legitimate sources of funding to bring investors together with issuers. And apart from some of the pure monetary opportunities that are out there, when we were looking at developing SDX, one of the core elements really was looking at, well, how is the landscape changing? And this is, where are we here? Here we go. This is really the approach we took going into it, that we said, look, we have a market on the left-hand side. You see the scale. It's all about what kind of asset types are they, and at the bottom, what's the model that we're currently using. In the traditional space, you can see obviously there are no native tokens in the traditional model of stock exchange, central counterparty, central securities depository. This is where all of the mainstream business today is operating. And in the top right, you see new players coming in today, primarily in the cryptocurrency space, but they're starting to move down into digitalization of assets, digital models, and looking at how can we move traditional securities into that space. And when I looked at it, we said, look, somewhere there's something wrong here. It cannot be, and this isn't just me being worried about being disintermediated, but it cannot be that organizations that already cover issues around investor and asset safeties, we already cover AML and KYC activity, we are already regulated, we know how this infrastructure works, and you've got a number of new players who are admittedly 1,000 times faster and more agile than we are, but still need to learn those things. There's got to be an opportunity there, and there's an opportunity here, again, in the context of a B2B model, to bring other elements of capital markets, other stakeholders, the traditional banks, broker-dealers, investment banks, and so on, into the digital world. And at the end of the day, that's part of our role also as an infrastructure. Now, I think Ian, you said it, there is a school of thought that says, who the hell needs all these banks and other intermediaries, right? And maybe that's right, and maybe I'll burn in hell. But I suspect I'll be in very good company, so I'm not overly worried about that. I'm sure that existing business models will fall by the wayside. What I'm not sure about is exactly what it's going to look like and over what period of time it's going to happen, because there are so many parameters that we at the moment can't directly control. A lot of it is regulatory, a lot of it is extremely fragmented around the world. Regulators in different countries are addressing the issues very, very differently or not at all. And so this is going to take quite an amount of time to do. But even if we accept that the old models fall by the wayside, and because it's going to take time, I think there's an old expression that is very apt here, and that is, if you want to break the rules, you first have to understand them, you have to master them. And that's an area that I think we're already well placed for, and I think any one of us that believes that governments and central banks, other regulators are going to allow unfettered competition in something that's as fundamentally and profoundly related to how economies function, at least in the Western world and increasingly in the Far East as well, I think they're going to be sadly mistaken. There's a process that we have to go through to get there. It's going to take a lot of building of trust to get there, and we're nowhere near that yet. People don't understand what the opportunities are yet. Regulators don't understand the opportunities yet. And in many cases, we don't. We're all looking at this thinking there's an angle in there somewhere, and there are things we can do, and there's some great ideas out there, but we've got to build the bridge from those ideas to today's reality. So I think governments and regulators will allow this kind of creative chaos to go on for a certain period of time, as they have done with crypto exchanges. But there's also a truism that probably the most creative innovation is the energy around criminal activity. And one of the things that we've got to try to do if we're going to bring this kind of asset digitalization and technology modeling into the mainstream is make sure we address those issues. The best example for that is really what's happening with data at the moment. I don't think it's an understatement to say that the data is probably considered to be one of the most powerful things in the world at the moment. And we've seen data being used and misused. We've been giving over the last 15 years personal data to a number of organizations in social media, and we're now starting to see what's coming about as a result of that. The governments will crack down on that, and there is no reason to believe that digital data related to securities, when you open it up, whether it's in a blockchain or just making it more widely available, is going to be any different. On the contrary, because you can use that data and potentially misuse it to substantially impact how economies function, there's an even greater vested interest on the part of governments and central banks and regulators to ensure that there are at least some controls around that. So if we accept that and we look at how regulators are looking at what we're doing, I think it's worth pointing out we're very fortunate here in Switzerland in that the lawmakers here have taken a very proactive and constructive approach to looking at how we can deal with digital data, including maintaining the core values around asset and investor protection. So if we look at that, we look at some of the challenges that we're facing. In today's digital space, what have we got? We've got very little transparency. Most current exchanges are little more than unregulated brokers, in some cases poorly capitalized unregulated brokers. We've got no legally binding accountability. What happens if the broker goes belly up? What happens to your assets? If you haven't got them on a USB stick, you may have a very significant problem. There's an absence of regulation around KYC, anti-money laundering, monitoring of transactions, unacceptable in today's time, in particular when we're looking at things like terrorist financing and so on. It may work for a while in the retail market. It doesn't work at all as regards getting mainstream acceptability amongst institutional investors. Yeah, and these are still the main drivers of wealth, frankly. Why? Simply because most of us and most of our peers at a retail level don't have the level of knowledge and aren't interested in managing, for instance, our own pension schemes. That's still being done by institutions on our behalf. And given the complexity of the investment world, I rather doubt that we're going to see the next generation behind us or even the ones after them actively managing their own pension schemes and being happy with that type of activity. Most of us, frankly, can't be bothered. And I say that as someone running a stock exchange and a CSD. It's a completely different thing if you're running the local co-op. I mean, there's just no affinity to our world in any way. So those are some of the challenges we face. What are we doing at SIX? Our announcement last summer to launch SDX goes far beyond simply creating new asset classes or a trading venue to trade them and to custodize them in the CSD. In earlier applications of various new technologies, including DLT, we very quickly came to the conclusion that there's no business case in taking old processes and automating them with new technology. It doesn't make sense to keep the old process. And so what we looked at is how can we collapse functionality and really get efficiency gains, but also provide a basis for a whole series of new entrants into the market to use the fact that you now don't have to have as many layers of infrastructure intermediated between you. So what we have today is we have a stock exchange, a central counterparty, and a central securities depository. SDX will bring those three FMI, financial market infrastructure functions and licenses together into one legal entity. So with the trade, you instantly have the settlement and the booking in a digital wallet. By converging those three functions, we reduce a lot, really a lot of the inefficiency that are in the system today. Think just for a second about just a normal equity transaction, the way it flows through the process. You do the trade, 2 days later you do the settlement. In the meantime, the CCP does a matching and netting function and takes responsibility for guaranteeing the settlement. That's not free though. And we have many billions in collateral in so-called default funds to ensure that if we're guaranteeing that a settlement happens and one of the counterparties defaults, we still have in this default fund enough money to cover that transaction. So you have inefficiencies related to liquidity. You've got collateral deposits in multiple places around all of the financial markets that if you manage to get instant trading and settlement, you don't need most of that. You'll need some haircut, but you don't need most of it. So the intention is really to go a lot further. I see you waving. The intention really is to go a lot further in providing not only an efficient infrastructure and opportunities, but also to ensure that we're providing that robust ecosystem that allows participants from the entire market to develop their own business models around that. At the end, if we want to succeed as SDX and as an infrastructure provider 6, we don't just need to deliver a platform. We need to deliver an environment of rules, regulations, standards that everyone can accommodate and adapt to and provides legitimacy in the process of investing and realizing the benefits out of the new asset classes. We expect the benefits to be substantial. I've mentioned just a couple of the benefits here. I'm not going to go through them all in detail. But part of our role as well is to facilitate the transition from the old world to the new world. And that's really where we're looking at it from an established infrastructure perspective. We're running SDX in parallel to the existing structure, and the two will continue to run in parallel. And clients will have a choice where they want to trade. And over time, and I suspect it will take a few years, we will then at some point reach the tipping point where we then go out to the market and talk to clients about, is it now time to start decommissioning the existing structures that we have? So SDX represents a full end-to-end infrastructure, and we're well on track. I'm delighted to say we're on track in terms of our planning for this year. We've got a lot of work still to do. It's a hugely exciting project, and I'm very much looking forward also to working with a great deal more of the stakeholders as we develop our platform further and develop a lab that everyone can work within. We'll be seeking out most of you as market participants to start working with us on the development of that ecosystem going forward. You've got a number of great speakers this afternoon. I wish you a very constructive, very productive afternoon, and all the best of luck in the new ventures. Thank you very much.
Sure. A couple of minutes for questions, and there's some roving mics. So if anyone wants to ask a question, hand up in the normal way. No questions?
That makes it easy.
You're going to lose Tom. He's going to go.
There's one.
Thank you. That's very good of you.
Thank you. Thank you for your presentation. What I didn't really get is what SDX is really doing, and what is the ecosystem where other people can connect to. Is there a presentation somewhere or some more detailed explanation?
There's a whole series of user groups now ramping up to work with our clients to develop it further. There is a presentation that covers in detail what we're doing, what elements are covered, what it's going to look like, what protocols look like, and so on. But that's a developing process as we put the infrastructure in place.
Probably that's internal, right? There's no...
For the moment, it's still internal. The
Okay.
user groups, it'll start coming out in the user groups. What we intend to do is, we're on track for piloting native digital and ICO services in the third quarter this year with 5 banks. And the plan is to then go live in production either Q4 or Q1 2020. In parallel, along with the regulatory discussions we're having, we're developing the bridge to the old system so that we can, as a second phase in 2020, 2021, subject to when the regulation is in place, being able to take existing securities and move them into a tokenized environment.
But this roadmap is not public, right?
That roadmap is public.
Is public.
Yeah, the
And where
roadmap
can
is
it
public.
be seen? Sorry.
Yeah, sure. I mean, you talk to my colleagues over in SDX. Absolutely no problem.
Okay, good. Thank you.
Perhaps one more question? We should let Tom go. Can't believe I'm
So, hello. Yeah.
You need the exercise.
So. Okay. Just short
Thanks a lot for the
question.
presentation. Quick
We
question.
were talking about the regulatory parts, and I would be interested if you can.
Somebody beat you. Sorry, can you start again?
Okay. Is it okay now? Good. I would like to shortly question about the regulatory parts, because I think cryptos are now not everywhere accepted, and if you want to bring them on this level, I think it looks like they should be accepted everywhere globally. So is there any outview on this, or what is your impression on this?
Our going in position, it has not changed, is that it's not in the first instance about the existing cryptocurrencies at all. It's about taking assets with a substantiated value behind it and moving that into a digitalized environment. So whether a cryptocurrency meets the standards required is one of the tests that will need to be done before any regulated exchange accepts them for trading and issuance.
Can I ask now? Quick question. You mentioned you're building up a platform and a type of an ecosystem approach. Are you treating it as a proprietary solution, or will you open up the source to the participants in your ecosystem so people can learn from it and build up the technology further, which is just emerging basically in the B2B space?
It will be a permissioned environment, but it's not planned to be proprietary. Now, exactly what that means, I can't say at the moment. Certainly, it's in our interests and in the interests of the stakeholders in the market that we're as open as we possibly can be, so that everyone can use the elements of the ecosystem that makes sense for them. And that's part of the acceptance of it.
Last question.
In the traditional world, usually the issuers are banks, and that's most of your members or stakeholders. Is this platform, SDX, also open for the companies who are issuing their assets or security tokens? So you're talking to companies directly, or is the first phase only for user groups, i.e. banks, which are planning to issue tokens?
The first phase of user group work is indeed with existing intermediaries, banks and broker-dealers. But it's not true that the issuers are primarily banks. I mean, Novartis isn't a bank, Nestle's not a bank.
Sure.
I mean, they use intermediaries at the moment to facilitate the issuance in an IPO. I don't think that that will necessarily be the case going forward. So we have a standard that will be related to what we do on the IPO side in the traditional world for doing ICOs in the digital space. I fully expect I expect that to be less onerous and therefore available to a much wider range of issuers than today's environment is.
So then issuers like companies could talk to SDX also directly.
Yeah, of course, absolutely.
Okay, thanks.
Great. Tom, thank you.
Pleasure, thank you very much.
Thank you for those questions, Tom. Thank you.